What is up, everybody? Welcome to Pre-Market Prep, my friends. You're all doing well. Everybody in here and give people a chance to get started. We have a lot of things on the agenda today with the Fed interest rate decision, with earnings coming through. We're going to be doing some ticker time, of course, and then give you guys a chance to kind of just request some stuff and then go over some hot flying tickets today. And yeah, we'll take it from there and see how things roll. But I've got some awesome people here with me today. Jerremy Newsome, bring him on. What's up, the legend. Jerremy, you and I are going to be hanging out today, going over some tickers, helping everyone out, helping make some money.
What's Tony!
Up, how are you? Good morning, everybody.
By the way, for some reason, I can't hear you. It could be just me, but if you can hear me, I can't hear you.
Dang.
Yeah, but you look good.
Oh, thanks, man. I hope you guys can hear me. Type in a 1 if you guys can hear me. We're new at this over here, but we're not new at trading, and we're gonna have some fun today on some of these charts.
You just keep doing your thing, man. I'll figure it out.
Sweet, guys. Well, we've got a big show today. We're going to go through, and I'm going to recap some of these markets here real quick and just kind of give you an idea of what I'm looking at here to start the day out with. So let's run with that real fast, and let's get started here. So this is on the futures right now, the SPX 500. And today, with the Fed interest rate decision, I think that we have some potential volatility working their way in today. So with that, we've got, SPY sitting at 27% implied volatility. It's up there. So I'm expecting some movement, bullish or bearish. We're going to be talking about that later on. But we sank back down. We hit the 10 EMA a little bit. Let me clean up this chart here for you guys. Hit the 10 EMA, and we're starting to find some bulls. But I've been watching these charts day in, day out as I do. I'm seeing a lot of weakness, right? This breakout here should have been so bullish, and it really just, it was a nothing sauce. Broke out, nothing happened, started to drop. Bulls are starting to plan and build here. Bears are starting to build here. And so now it's just a matter of, will these levels break today on the Fed interest rate? If we can start getting below that 68.30 here on the SPX, we're going to see a lot more downside. And I think the downside is probably pushing us back down here to like 67.70. I could easily see some bulls stepping in through here. I'm going to be a buyer down through this dip area here. At the exact same time, if the Fed interest rate starts pushing us through this large level here again, around 68.80, all-time highs are around the corner. And so that's what I'm kind of seeing at the moment. It's hard to figure out where we're going to go because Powell can change the whole narrative. At the moment, it is feeling a little bit weak. It's not really moving the way we want to. And that's really just because we're extended. I mean, if we jump out here to SPY, Jeremy, we put in how many bull days in a row? I don't think I can count that high, but it's quite a few.
So, you got to use both hands. Got to use
I was going to say, I run out of fingers. So
yeah,
run out of
man.
fingers. Yeah. So what are your thoughts here on the market so far on SPY? And then we'll kind of jump over to Qs and IWM.
Yep. In general, I do believe the overall bull trend will continue. I think at any point we can have another really weird black swan type of event that we had, recently. That we had 2 of them in the same calendar quarter. So November 20th, obviously, and October 10th. I think we could have another one of those. I don't think it's going to happen today, but we had an inside candle yesterday on the SPY, which is just really, really indecisive. Says that we have no clue what's happening. I think the strongest thing that we could get is a sell-off today into 675, and then we just absolutely rip all the rest of the year.
Dude, that is the plan. That's what I'm hoping happens, honestly. I would love a dip.
Oh, it'd be so nice.
It'd be so good. The Santa rally would just be epic, because same story. I mean, honestly, I'm looking at this and I'm going, look, I don't think I found another chance where we've had a big bear day like this, where it's like a week's move followed by another big bear day like this. And then we don't go lower. This should be squeeze. I mean, it already is squeezing bears out, but this should be a fantastic buying opportunity on any dip if we get one. It's almost too strong. I wonder if this sideways kind of is the pullback in time that we probably just start leaving without people potentially today. But if it does give us an opportunity to buy, I mean, this 50 EMA sitting at 670. We've also got a lot of options sitting out there, put wise, sitting at 670. I don't think we get much lower than 670. I'm starting to buy at 675. I think 670 is going to be pretty awesome. If we take over here at the Qs are holding up, in my opinion, way better than SPY has, but I still don't like these little false breakouts. I would have loved for this to close stronger and to keep pushing into all-time highs, but inverted head and shoulder potential. That's kind of what I'm seeing over here. If we get that little dip, it kind of makes sense to play out and start to find some bulls. Either way, I'm pretty bullish. I mean, until we start taking out the low of, what is this, like the 21st November?
Yep.
As long as that low holds, we should be screaming going through January. I just don't see another scenario. As long as this holds, bulls should be all over this.
Yeah, I agree. And what's ironic is it feels a lot different, but if you go year to date on SPY, so you pick, Jan 1 of last year, although we haven't fully printed December, year to date on the SPY, we're at 13%. And if you had snagged some of those April lows, depending on the exact time, you're around 30-ish% for the year, which is just another great indicative reason of trying to buy as low as possible on any asset class that you ever want to own. But in general, man, the reason I'm saying that is because it seems like we're extremely, extremely high.
Yeah.
But year to date, it's another good, strong average year, which is a good thesis that we have no issue going higher, to slowly continue going up.
Yeah, it's 100%. Especially in my mind, if we're this close to an all-time high, it's going to shake some people out because this is everyone's targets. So it's going to want to shake some people out normally, whether that's today or later on. But it'll push back through. As soon as everyone starts to get a little bit scared and sell, I think it could be one last little liquidity grab. And so on the Qs, look for like 600 or so to be that pocket of liquidity. I could see a lot of people starting to freak out there and bounce. If we even get down that low, could be pretty fun. Now, IWM is going to be super sensitive to what goes on today. And we're actually going to be pulling up a couple tickers when we talk about the Fed rate decision here. So in just a couple minutes, IWM is going to be super fun. We're already pushing all-time highs. It's kind of stuck there. Now, I haven't done enough to actually look at the numbers. If we've poked our heads into a new all-time high, I think we've kind of just got stuck, maybe by 1 penny. But what are your thoughts here on IWM?
Yeah, I can't draw on your screen, which I'm trying to figure out if I can actually. But what I will say is you'll notice very interestingly that on your trading view, the volume. So the bull volume actually superseded the bear volume on that big drop two weeks ago. And that's a really, really interesting signal to me. That's like, yep, we're all good to go. Now, the volume that is declining right now, I am blaming that from the holidays, right? You had your Thanksgiving holiday, and then we're going to have Christmas holidays. So I actually do think that we make new highs with low volume, and that's going to have all the bears go, oh, it's not real, it's a fake out. And then we're just going to keep going, which is wild. It's wild. And at this exact moment, I don't have any positions in IWM, but if I did have specific shares or some level of ownership of this asset, I would be getting into a collar, because you do have a big Fed decision coming up. You have a big discussion today, end of the year, Q4. We're at all-time highs. We're at a resistance that even a 4-year-old can see. So I would have at least some type of downside protection, some exposure, all the good stuff. Man,
yeah, that's a perfect play. Callers, my friends, we're going to be going over a lot of education later on today. I'm going to be going over a strategy that's been printing me money for over 7 years now, every single week with over a 90% win rate. So we're going to be hitting that up whenever I run the session later on today. Let's see, at 3:30 p.m. Eastern. So jump in the Traders Network in there and let's party and go over that strategy. But options are such a cheat code, and a caller is such a great play. I would love to play something out here, sell something out. Like, Jeremy, I would even kind of stack this up. I would sell these calls probably like 3-4 months out. Sell something around like 260 to 270 is like, you can't go wrong. Use all of that income to fully pay for the puts that expire in like 30 to 50 days. It's a free hedge. You can't lose on that play. And you can still make money all the way up to that 260, 270. That's how I would play it. I feel like that's a no-brainer. If it goes higher, you make money. If not, you're fully covered.
Yep. Fun fact, the additional strategy that I've been using with options for callers, at least in this exact market right now, because we are so bullish and we haven't taken out any major support levels, is I've been doing a bear put spread on the bottom. So the bear put spread means you buy the put, like you just mentioned.
Yeah.
And then I sell a put against the put that I purchase. What that does is it decreases the cost of the insurance even more. Yeah. Now, it does limit my downside protection. But again, with a very strong bull market, a lot of people have been selling puts and making profits anyway. So it's like, all right, if you're going to have a call, if you're going to have a protection of yourself, you're going to sell that call 3-4 months out, like you said, which would be incredible. Use the call premium to buy the put. And since anytime you own an asset in the market, anytime, you can always sell something against that asset. So you own a put, sell the put against it, cheapen the insurance costs. It's a great, great strategy.
Man, I love that. That's a great approach to selling a put against it. Like you said, it does cap it, but I mean, unless you're trying to protect yourself against like a 15% drop, I mean, you're safe. Make it cheaper, and honestly, you can give yourself a chance to buy some more shares if you were to sell that put down in a spot where you want some more shares. So there's a lot of avenues on this. Man, you can start getting fun on that. So let's dive into Chewy. We're getting a lot of people talking about here with Chewy over earnings. I haven't followed too much over here on earnings. I'm going to trust that TradingView is giving me some accurate numbers. But it looks as though they have beat pretty much across.
Yeah, they beat earnings and they're going down.
Beat earnings and going down. So I'm not sure if projections right now are probably hurting them a little bit, but I feel like we are stabilizing. I feel like we're basing. This is not like a death gap. It's not like, oh man, this is really rough. It is gapping down some. But what are your thoughts here on Chewy and kind of where we're at right now on the charts? And then I'll throw my 2 cents at it.
Yeah, man, that's you know what? I actually think it is kind of a death gap, a little bit. So
Let's hear it.
Two big moving averages that are holding it up. If you go to the weekly chart, I've still used the same boring stuff that I've been using for a long time. The 100, 200 simple moving averages on the weekly are the only support that Chewy has. And they actually are good support levels. Yep, perfect. Nailed it. There they are, that blue and red. So that's the only support they have. They had great earnings. They had a good gap down. Man, if they take out that 100, it's it. It's a wrap. It's over. Sorry. Thanks for playing. Goodbye, Chewy. I mean, in this market, things need to be going higher. And with earnings like this, good earnings, getting torched, it's just not the best of signs. Chewy, I mean, again, a lot of dog owners are very, really pet owners. You own 2 beautiful doggos. Oh, yeah. Pet owners love Chewy. There's nothing wrong with owning Chewy. There's nothing wrong with loving Chewy. I do think, though, that just in general, with earnings like this, with this type of gap down, it's just not as aggressively strong to be buying.
Totally. This is, if we were gapping below $30, to me, that's the death gap I'd be talking about, of like, holy cow, we're done. It's got a chance, but this is not looking all that great. And really, for me, I'm kind of seeing a little bit of compression coming across here. If I were to kind of draw this, it's a really bad trend line. We get a close above that, and there might be life back into Chewy, back up into like $40 to $50. And that's what I'd be looking at. Long term, I just don't really see this thing making any kind of moves. In fact, most likely going to stick inside a consolidation for a while. It wouldn't shock me at all if we head back to $20. So let's talk some tickers here, my friends, and get rolling on that, and then we'll kind of get into the Fed rate decision. So if you guys got some tickers you want us to go over, throw them at us. Let's talk about what you guys want to go over and see what's on the docket here, what you guys are seeing for potential opportunities on some buys, and then we'll kind of throw some 2 cents out there as well. All right. I'm getting a couple here. Normally I don't have to watch this chat pane. So App has been on an absolute roar. Super great buy zone back here at 520. Bulls stepped in hard. We're coming into a massive resistance. If we can continue to close high and strong above this previous all-time high, to me, that's going to tell me the game's going to continue. Keep buying dips. If we get stuck here, you've got to really zoom out and see how far we've gone. I mean, this thing is, we're only up like 880% over the last year. That's it.
Weak numbers, bro. Try to be a Carvana. Come on. Come on, AppLovin. What are you doing?
Yeah, seriously, man. I think the game's probably close to over with, right? If we're going to look at the game is get everybody in, sell to the poor, right? Sell to the I don't want to say the street calls it like dumb money, but that's me. I'd rather not call us all dumb, but sell to the retail trader, sell to everyone else that's all excited to buy. It's kind of feeling like that trap is setting up here soon. It doesn't mean that we can't climb, another 15, 20%, but I would say that this thing is getting close to being done. This was the real buying opportunity. We're coming into the profit-taking zone. If you wanted to day trade this, some really fun day trades are going to be whenever it pokes its head up above this all-time high. Look for everyone to get trapped and see if it sucks everyone out and pulls the rug out. That bear day trade is going to be amazing. For swing trades, I wouldn't touch this thing with how extended it is. I would be actually looking to play, again, that trap to push us back into 660, and then we'll see where it goes from there. So that's kind of my 2 cents I'd have on this one.
I love that analysis. It's really, really good. By the way, yes, for everyone who's coming in, both myself and Tony are going to be here for the next 3 days. Joel and Dennis are amazing friends of mine. I've been with them for years and years and years. And Tony and myself are doing a takeover while they get to relax going into the holiday season. So chat, appreciate you guys blowing it up with all these comments, these kind, thoughtful, useful comments. You guys are doing amazing. This is so much fun. Having a blast.
Yeah, man. The chat's getting loaded up with tickers. Nvidia is one that's been highly requested. So, Jerry, give us your where is your top-down view on Nvidia? Throw some fundamentals out there. Where are you at? What do you see on the charts? Where are you at on Nvidia?
Top-down view. So I'm bullish on Nvidia right now. And the main reason is because, again, you had phenomenal earnings on November 20th. And that's kind of the day that the whole market sank, right? So you had the big gap up on Nvidia. Everyone was excited. And then really, really strong sell-off. In fact, let me see if I think I should be able to do this. Let me try to see if I can do a screen share, dude.
Oh, yeah. Here you go.
Oh, snap.
There, you present it.
Oh, snap. All right. Can we see this?
Oh, yeah.
Yeah. All right. So Tony and I are just killing this technology game. Okay. So Nvidia, I'm going to just hide some lines really fast. So this was the really strong selling day right here. This was the November 20th big earnings. They did incredible on earnings, and they had this massive, massive gap up. So everyone in the mom knew that that gap was going to fill because the same one happened just a week and a half before. Stock was down here at 185, had a big gap up, and then eventually that gap filled. Same thing happened, just a lot faster on November 20th. We traded down into the 100, and we've been compressing here essentially since November 21st, almost a month, with this high wave indecision candle and a perfect hammer here. Today, we are getting a move above this hammer style candle. If you really, really zoom in and just analyze these candles for a second, you have a bear close above the 100, strong bull candle closing above all resistance, inside hammer candle. And fun fact, both of these bear candles, both of them are closing above the 10 exponential moving average, this red line. So what that shows me is any push higher is going to create a little bit of bull momentum. And in general, now let me see if I can stop presenting. Oh, you nailed it, bro. You got that, Tony. So in general, I do think Nvidia kind of keeps pushing a little bit higher. I have put sales on NVDL, which is one of the funner stocks to trade of all time, especially if you're a big options fan. The bid-ask spread on NVDL is absolutely gargantuan. The open interest is amazing. The volume is amazing. The implied volatility is astronomical. you can get incredible premiums on NVDL. And then Nvidia, I'm in call options, I'm in shares, I'm in covered calls, I'm in put sales on NVDL. So just in general, I'm bullish.
I love it. Yeah, I love that trend line that you kind of got going through here. And honestly, again, like looking at, I love to zoom out. This stock has been rampaging, but this price action on a big time frame, it opens the door for buying the dips every single time. Even if this doesn't hold, it will bounce with a high probability, at least to me. You can see where my alerts are at 170, 160, 150. Like I am all about these levels. Let's see if they end up actually ever getting hit, because I agree with you. We're kind of at that tipping point, even in the markets. We were talking about that at the start.
Yep.
The markets are kind of at that, like, are we getting ready to go to all-time highs and just push 700 on SPY? Or are we going to start getting that dip, which would be an amazing buy? I think Nvidia is going to follow that along with it, because if it just dips, there's going to be so many buyers sitting here. A lot of people getting burned up here that bought too high. It's that same game. And so I'm always trying to put myself into other people's shoes. How are people feeling that bought up here? They're scared. They're worried. They're hoping for a bounce. They're hoping for all this stuff. If it starts to drop, I feel like they're going to start getting liquidated out some. People are going to start getting very scared. The bag holders that kind of bought through here are going to go back to break even. And, they're like, I was super profitable. I should have just exited. And then they're going to start, their emotions are coming in. Put yourself into the shoes of others, and it's really easy to start predicting what's about to happen, because the markets are just a reflection of people's emotions right here. That's all it is, right? So we'll give ourselves a chance to be able to see where are the emotions at. I could see fear here from a lot of people. I mean, there's a lot of buyers up there. And at the exact same time, if you were just to zoom out to a monthly, you'd see, man, this support, that 155 to 150 is, I feel like, the bottom. I don't think we're going to get there. I think it's too strong. I agree with 100% with what you're saying. We start breaking out of some of these levels and get out of here, especially if SPY wants to go bullish. We'll be pushing back into 210, 215 within, by January, I would say, like quickly within weeks.
Oh my goodness. Yeah, it's going to be a lot of fun. All right, I got a good one for you, Tony. What is a stock that you love right now, but no one's talking about?
That no one is talking about.
Like, if you bring it up, people are gonna be like, what is this guy smoking? What is he on?
Oh my gosh, man, I'm gonna have to go through my list and find something here good. That the hard part is that no one's talking about.
Well, maybe not. No, you know what I mean? Very, very few. Like,
it's just not on people's radar.
It's not sexy right now. It's just not sexy.
Oh man. I've been sticking so much towards SPY and just hanging out on this thing that I haven't looked at a ton. Okay, so if honestly, it's Netflix, which everyone's talking about, but it's like, that is the one that I really, really want. I'm going to give you a better one that no one's talking about. But first things first, my friends, Netflix, if we can get down, let me go to a little bit bigger here. If we can get down into like $90, it's my buy. It's what's going to pay the bills all next year. I love Netflix on this dip. I don't know if we'll get down into this range, but I feel like this is a very, very strong buy the dip candidate. Again, zooming out, we're touching apps. I mean, just barely touching this 20 here. If we pull up, let's pull up our EMAs here. We've got our 20 touching here. I love this 50. Man, the 50 last time has been where this loves to really pull back to. So again, I know this is not something that's not on someone's radar, but to me, this is a fantastic buy the dip. I love that people are getting a little bit nervous on this. They're getting a little bit worried. News is kind of hitting this a little bit, and it's how it always is. But the charts are telling me this thing's going higher. It's just a matter of time. And so I absolutely love this. This is one that's on my radar.
Yeah.
Another one that could potentially be there that is not on a whole lot of people's radar. I've been watching this thing. It's a dead horse, but I've been watching UPS now for a couple years, waiting for the Bulls to do something.
A couple of years.
Couple years.
2021.
Look at this little baby trap off of this massive support after something's beat down. So if you want a 30% mover, I believe this has got 30% in it, and that's not even that hard back to this resistance. I feel like this is kind of a sleeper that's not on a whole lot of people's radar, but I'm not saying this thing's going to all-time highs, but I do see an opportunity right now for some potential bull moves that no one's really looking at. And again, this is one that's no one's talking. I don't know if anyone's really talking about stuff.
No one's
There's
talking about
bad
UPS.
news.
Don't worry. You're safe. You got it.
Yes. Yes. I knew this would frustrate people. People like, this thing's in the trash. I'm like, I know it is. But a stock can have a fantastic bull move even when it's bearish. And this excitement here after putting in a new low and stopping everybody out is exactly the momentum I'd want to see. And so I really like this play kind of back up into like 120, 130. It could be a sleeper to keep an eye out for that is not on someone's radar. What about you, Jeremy? What's a ticker you've got for us?
Dude, you're supposed. I was just asking you, not me. I got a few that I'm keeping a close eye on for sure, and they're all just absolute dumpster fires. So let's bring up some companies that make no money whatsoever.
Let's go.
And the reason I'm looking at them is just chart patterns. So OKLO, 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 and again, I'm going to preface this with a couple of times. These are just terrible companies. Terrible. So do not invest in these because you want to. Let's see. I can do the share screen again. All right, sweet. Give me 3 seconds. There we go. Pop over. Okay. So OKLO, ladies and gentlemen. Tony, you ready for this? You probably haven't seen this in a long time. Look at this. Look at this estimate. See this number? Revenue. You hear this number? Ladies and gentlemen, type in a 0 in the chat pane. If that company makes $0, you make more than this company that has a market cap of multiple billions of dollars. So this is a dumpster fire. Now, dumpster fires can go higher, aka September up into October. This was an incredible, incredible move. And in fact, if you just zoom out, April into, this was a 900% banger. So that's an incredible, incredible trade opportunity. But I'm a candle guy and a pattern guy. So if I'm looking at this right now, you have a very, very strong candle and then 3 inside compression candles at the 100. So the truth is, this is my little drawing a couple weeks ago, and it can go either direction. Either direction. But the beautiful part about being a trader, ladies and gentlemen, I think we all know this. If you trade, guess what you have the opportunity to do? Make money in any market, if it goes up or if it goes down. So OKLO is going to be a good one for me as a compression. RGTI is doing the exact same pattern, but a little bit cleaner. This is a double bottom. Very, very clear double bottom. Close with a neckline, retest the neckline at the 100. This is kind of like my pattern. I love this setup. So I do have bullish entries on Rigetti and Oklo, which are both just terrible companies on a revenue side. This thing makes $1.9. Tony, you made more than this last year. 1.9. Like, these companies are not good. So it doesn't mean they can't go higher, though. And really, just in general, the trend on these is really, really fantastically interesting to just watch for some alpha, some super quick up or down movement. Now, larger companies that I'm actually watching that no one's talking about because they're awful and terrible, Chipotle. Ooh. Chipotle, CMG. So, team, here's the thing on Chipotle. Me and Tony were not biased on money. Chipotle had a massive sell-off when no one else did. 51% in 2016. What other stock went down 50% in 2016? It was like just Chipotle. It came down into the 100 simple on the monthly chart, and then it had about a 30% bounce, and then it went down again, and then had a long-term consolidation before it went higher. Speaking of textbook inverted head and shoulders, if you need something to print out and give to your kids for Christmas to study, there it is. There's your inverted head and shoulders pattern on Chipotle. Now, check out where we're back to, Tony. So we have, I'm just going to pick like almost the exact high. We are at, again, a 57% decline. You have another trade down to the 100 simple on the monthly chart. You have another bull candle. I think there's a really good chance that Chipotle does this, pushes a 30% win, just like you said on UPS, trades back down lower, consolidates for a while, and then goes higher. History likes to repeat itself a lot, and both Chipotle and Costco are at 2 spots that I really, really dig it. Costco has earnings right around the corner there this week. It's at the 100 simple on the weekly chart. I know a lot of people are talking about Broadcom, AVGO, and then I'm going to pass it over to Josh. So Broadcom has earnings coming up. So both of those big names are going to do some earnings.
Oh, we lost Jerremy there.
Jerremy.
I took over. Good morning, everybody. I've been lurking in the background here. Yes, Joel and Dennis are away. They will be back on Monday, but big thanks to Tony and Jerremy here for stepping in. They've been doing a great job. You guys have been getting some good tickers in here. I do have some macro news here. We just got a delayed employment cost index report here for Q3. We were expecting 0.9%. We actually came in at 0.8%. So just a little bit light there. And I also have some business to take care of since nobody's home, but somebody's got to keep the lights on, right? So bear with me, even though I know you guys might not all use TradeStation, but I have some TradeStation charts pulled up here. The charts are brought to you by TradeStation. And for advanced charting tools, custom order types, and a powerful trading platform, you can click the link below in the description or visit tradestation.com today to learn more about that. And then one other quick matter of business, and then I can let you guys get back to it with all the tickers here. And I want to let you know that this show is also brought to you by Hive Digital Technologies. It's a global leader in green-powered data centers for Bitcoin mining, high-performance computing, and AI. And I believe, Tony, that you did have a ticker that was a little bit Bitcoin-related that maybe you could touch on here. But Hive operates with nearly 0.5 gigawatt of renewable energy and is on track to capture 3% of the world's Bitcoin production by the end of 2025. Right now, you can scan the QR code on the screen or visit the link in the description to learn more about them. There we go. Business taken care of.
Awesome, man.
We can get back to the show here. Thanks again, Jerremy and Tony, for filling in.
Dude.
You guys are awesome.
Hey, Josh, all good, man. Thank you.
Yeah. We do want to actually hit on some crypto and jump into that. And then we also need to get into the Fed interest rate decision a little bit here and show you some of the stuff that we're looking at. So let's start with that. Let's start with the Fed interest rate decision because it's a big deal. Every time we have these Fed interest rate days, it's a tone setter for sure on the markets. It's something that the markets are expecting and waiting on. We have a heavy bias towards a rate cut. And so whenever everyone, I think it's like over 90% of analysts are saying, hey, rate cut. So what doors does that open, Jerremy? How can we play that? How can we take advantage of that as traders?
Well, essentially, if they do cut rates and they agree, and that's the consensus, then interest rate dependent companies are probably going to do relatively well.
Yeah. And
I think with silver and gold being as high as they are, if you want to pull up a silver chart, silver would probably be impacted just a little negatively. Not in a bad way, but it would just have a slight pullback, probably 5 to 8%. I went to the Money Show recently to promote my book, Money Grows on Trees, obviously, and there were so many bulls on silver and gold, but there were also people that were like, nah, it's at the highest price, it needs to go down. It was a beautiful blend. I love going to events like this because it gets me a good pulse on what's going on. To your point, if everyone is thinking the exact same thing, generally there's going to be a sign of some type of change coming in relatively soon. So it's probably not going to happen with the interest rates, but I do think that interest rate sensitive stocks will probably be affected. So silver, gold probably have a very small pullback between 5 and 7% if they drop interest rates. And then you have Rocket Mortgage. So RKT, RKT is going to be a very, very interesting one. Now, one of the things that a lot of people don't know about RKT is they just acquired a huge mortgage company back in October. And while the name is escaping me right at this exact second, that company was doing very, very well, and they were just crushing it. So I like rocket companies a lot more than I like Open Door. Open Door, OPEN. There's some really fun volatility with that one. There's some really, really cool movement. There's some incredible volume, a lot of compression. Just from a fundamental standpoint, Rocket has a lot better fundamentals than Open Door specifically, but you can obviously have opportunities to trade all of them. And these will move in one direction or another today and the next few months. And then last but not least, stocks that you need to be watching for the interest rate decision. The big one, ladies and gentlemen, Fannie Mae, which if I have another child is going to be the name FNMA, ticker symbol F as in Frank, N as in Nancy, M as in Michael, and A as in apricot. Fannie Mae is on the OTC markets, and this thing has crazy volume. Really, really fun volatility. It has some extremely interesting movement. It just bounced off the 200, just had a double bottom off the 100. There's a lot of stocks that are setting up pretty well. And if the interest rates go down, which I would expect them to, I do believe that this will go higher. And so there will be some very, very fun opportunities. Now, again, if interest rates, oh man, bro, the bloodbath that would occur if they don't increase interest rates. I mean, unreal selling would come in. But again, that would happen for about a week or two. We'd have a pretty bloody Christmas, and then everything would be just fine in the overall markets. We get a bounce and everything would be just good to go.
Yeah. I mean, and there even could be problems under the hood. Even if they do cut rates, I'm going to keep a very close eye on HYG. So this is our high yield corporate bond ETF. What this does and how this reacts after, let me clean this up just here a little bit. Actually, I'm going to throw it on this chart so I don't have that indicator on there. HYG. So what this thing does and how this reacts, if they cut rates and we have liquidity issues in banks, we are going to see it here. Your high yield bond traders are really good traders.
They're
really good traders.
You trained a couple of them, by the way, Tony.
They sniff out issues well before the markets do. And so if markets are cranking because they got their rate cut and HYG is tanking, look out. That could actually open the door to future sell-offs that could be 10, 15%ers down the road if that plays out. So we've got a lot of issues here. Again, this was kind of sniffing out the Japanese issues going on before the markets did. It's usually a front runner to the market starting to drop. So anytime you start to see a bear day or two on this, when the market's SPY Q's putting in a strong bull day or two, it's something to keep an eye out for. So like you can see my alerts here. I've got one at 80.40 just off of the support because I want to see if this starts to tank today after the announcement. And so it's a little bit of a cheat code that you can use, that you can throw into your repertoire to be able to say, okay, what's really going on under the hood? The markets might react one way, but that doesn't necessarily mean that something great's happening. We're going to get that initial reaction on a rate cut if we get it. Odds are we get it. If the markets pump and this thing kind of hangs out and a day or two later it's falling apart, now we know we could have some liquidity crisis on our hands here. That is, yes, everyone wants to borrow, but if the banks are stuck with liquidity issues and stop lending, we're going to have the same effect as raising rates. So we're just keep an eye out for that. I don't sit here and try to pretend that we're going to know exactly what's going to happen. I am not an econ major, but I do know charts, I do know trading, and I do have been in the game long enough, right, to be able to see some of these signs to let us know where we're at. And again, if we just pull up, I got to get UPS off my screen. We pull up SPY. I mean, my friends, we are definitely, like, we can keep going a lot higher. and I do believe we will. But we're at a place now where it's probably going to start slowing down. If I had to guess, January is normally when we see pullbacks. All-time highs, we've had a really, like Jerremy, just like you were saying, we've had a solid year. Pullback around the corner would not be a shocker to me, but it most of the time is a shocker to a lot of people. This hesitation at this level is a little bit of a warning sign for me. Like we were talking about this at the start of the day, that this weakness coming through that we've seen doesn't mean we can't go higher, but we want to see strong bull moves coming through this area. The last time we had a test into an all-time high, look what we did. Like that's strength, that's building momentum, and that opens the door to massive runs. We are not repeating that yet. Now, it doesn't mean that it can't, but these are the things that I'm looking at, and a lot of people are like, well, it's kind of dumb. It works. Go back. That's exactly how double tops are formed, is when you get this hesitation. This is where you read strength in the markets, not the big bull move. The big bull move is reaction from the previous strength when it tested that previous level here. And so the big bull move is how you make your money. It's not how you gauge the strength, because big bull moves can fall straight back down. We've seen a billion stocks do this. And so as soon as it makes the big move, everyone jumps on the bandwagon saying this thing's now going to go up. What I'm looking at is, what does it do when it tests a level that the bears previously took over on after a large move higher? That's the moment that we're in right now. And this is a perfect chance for us to be able to see what kind of tone are we going to set over the next 6 or 7 months. And if we keep chopping through here, again, I do believe a new all-time high is coming. We're probably going to 700 on SPY. It's a big level. And we can look at some option levels here in just a second. In fact, I'm going to go ahead and refresh this while I'm talking so that we can have that fresh and ready for us. But 700 is the big target. And I'll show you why 700 is a big target. When the markets are at all-time highs and we don't have anything over here to the left to tell us where to take profits, use the option open interest. This right here is all the expirations stacked on top of themselves. Day trading, 0 DTEs, all the way out to years. And you notice one thing right here, 700 is where they're all stacking. There's a reason for that. The big money is marking their line in the sand. This is where they're providing some liquidity. This is where they're saying the markets are not going to go higher to. And they tend to defend this position extremely well, because if we start breaking it, they start having to hedge and they start losing. So I look for these open option interest levels here to give me an idea of where targets could be when we're sitting at all-time highs. You notice that 690 is going to be a big one as well. So pay attention to that. If we do start to break bullish off of today's news, 690 is going to be a really solid target basically throughout this week. I think 690 is going to get hit if we go bullish. But look out for that 700. That's where I'll be finally exiting and taking a lot of profits here. But it all just depends on where we want to go. And so let's talk a little bit here on what the scenarios are. We kind of hinted on this a little bit earlier. I love when the bulls claim their line in the sand here before a big decision here. And to me, I'm going to say 680 is going to be my big line in the sand. And again, if we pull up our options, where are the puts sitting? 680. Where's the next set of puts sitting? 670. And if we start to drop, you're going to see a level start to build out. We don't know what that level is yet, but you're going to see a massive level come through on puts. And you can use that level the same way that I'm talking about 700 right now. And so you can start getting ahead of these markets a little bit and seeing what the big money's doing long before it gets there. So that is my bear scenario if the bear scenario comes. Don't try to predict. Have a game plan for both scenarios. If we break bearish, which I do believe we're going to see some momentum today. If we break bearish, I know what I'm going to look at doing. If we go bullish, I know what I'm going to look at doing. And then I just sit back and see which plan plays out, and I go and play off of that. What are your thoughts on that, Jerremy? What have you gotten on the Fed rate decision today? Any plays?
Everything you just said. Really, the exact play that I'm doing is I will wait today until probably closer to 2 p.m. Eastern. And my real big 676, if we get there on the SPY, 676, which isn't that far away, that would represent today or tomorrow, a 1% down day. That's it, just 1%. We get a 1% sell off on the SPY, 7 points. I will begin to sell some put spreads below the 100 simple moving average for the end of the year, December 26th. So I'll do some put spreads, and I will also do some call spreads if we take out yesterday's inside candle later in the day. So call spreads being like you said, sell some 700 calls as well, because today's candle, when I say today, I mean literally yesterday. Today is Wednesday, but Tuesday's candle was a perfect inside candle. Inside candles, ladies and gentlemen, represent massive indecision. This is a price that says I have no clue what's going to happen. So guess how many trades I took yesterday? And the answer was 0. I didn't take any because no decision was made. I only trade when decisions are made. Keep in mind, you do not have to make money every day to make money every month. So ultimately, what we're here to do is go, if this sequence happens, then I will do this. And so that's what I'm doing is I'm waiting. I do expect a quick little flash crash of 1%. It's not that big of a deal. That happens, I'll get into a bunch of put spreads below the 100 simple moving average on the SPX. So that looks like 6,600 and lower for out into December. I will also get into some call spreads above 7,000 on the SPX if we take out this little inside candle from yesterday, and then just kind of play this range. But ultimately, I do expect some slight selling. Has anyone ever heard the phrase, buy the rumor, sell the news? Well, selling the news is a likely chance. If everyone expects a rate cut, they do a rate cut. We'll probably have a quick little drop, especially at the all-time highs. People are going to panic going, this is it, bull market's over. When cutting interest rates is an extremely bullish move, so you're going to get some quick selling, some quick freak out, and then we go higher. That's just my expectation.
Yep, 100%. I would love that. This would be an early Christmas gift, my friends. Playing around 675.
Oh my gosh! Wow, yeah, Santa just hand delivering it to you.
Yeah,
not even coming through the. That's not even coming through the chimney. That's like walking through the front door. Santa's gonna hand you a gift.
Santa's gonna hand you a gift. I'll show you the plays that I'm in currently right now, and we're gonna go over to the SPX for this one. I'm playing some volatility right now. I've got an iron condor that expires Monday. Odds are I'm winning on this one by
what?
tomorrow.
What a beast. Okay. Tell us, Tony.
So I've sold the 6650 bull put spread, expecting us to have a little bit potential drop, but I don't think we get down to here. And then I also sold the 7015. Both of these expire Monday. So the real only way these are going to lose, these are like some like 5 to 10 delta plays, is if it puts in like 5 bull days in a row. Could do that. Or if it puts in 5 bear days in a row. Could do that. Remember what I talked about, the big option levels? We got some big option levels here. So I'm going to use that as my protection level. I don't believe we get much higher than that if it does go bullish. And then the strong support that Jeremy was just talking about, if we do dip, I don't think we go much lower than that. And so if we do, I've got a game plan. I understand what I'm looking at. I'm looking at these levels, and I will start adjusting my plays if we start getting through these levels. I don't want to just hope. Hope is a really bad game plan for a defense. I don't want to just hope that it's not going to go there. If it starts breaking strongly through, I will simply just roll some stuff out. That's my step number 1. I will be in some hedge calls and hedge puts and whatever I want to do. But this is an easy volatility play. There is a 5% chance that these get hit by Monday, let alone close across. And so this is a play that's going to make some easy money and then going to give me a couple percent return on my account with over a 90% win rate. So this is what I currently have on right now that I'm posting, that we took inside of our options community here in Real Life Trading. We took this yesterday, and I think this is a solid play that I don't really have to even be correct on. The markets can do whatever they want to do. It's just simply saying it's not going to go here and it's not going to go here, and let's see how it plays out. And if it does, then I'll just say I changed my mind, cancel out of this and sell in a new one that pays me more than what I'm losing on the previous one. So it's kind of like a free get out of jail card. It's one of the best strategies that you can do if you just want some consistency, and it stacks up over time. So definitely something that I'm looking at. And if we do drop, I'm going to start legging out. I'm going to get out of my bear call spread for pretty much 80, 90% capture. And then I'm going to see if this will bounce. And then I'll leg out of my bull put spread again for another, probably let that expire worthless or get out of that for a 90% capture. So that's my play I've got going on in this. If I wanted to day trade this, then it's a little bit different scenario. So I agree. I would expect a lot of chop leading into the announcement. So anytime the bears start to look strong, expect a bounce. Anytime the bulls start to look strong, accept a retest. So what I've done on previous Fed rate decision days is whenever this thing starts to drop and we get oversold on the RSI, I'll start buying some calls that expire today. And I'd actually do this more on SPY, not on the SPX. I don't buy options on the SPX, but I sell a lot of options on the SPX. So if this thing starts to tank, I'm looking to buy some calls. I'm going to be in calls no matter what for the Fed rate decision. I want to be in puts and calls at the same time because I don't know which direction it's going to go. I just believe a big move's coming. So if this thing tanks and goes all the way down before he speaks, which it won't be that much, it'd probably be like down into here, you buy some calls because I got to be in calls anyway. So if it keeps dropping, who cares? I was going to be in calls anyways. Once this thing bounces and we start getting overbought on the RSI, this is on a 5-minute time frame, extended hours off, I close out of my calls for a win, and then I use that money to buy my puts. And then I'm planning on it dropping down again because remember what I said. Normally, when it starts to look bullish, it starts to pull back. If it starts to look bearish, it starts to bounce, leading into the announcement. So you can kind of play this game if you wanted to. And if I'm going to be in puts and calls anyways, I don't care about being right. If I buy calls and it keeps on dropping, I don't care. I was going to be in calls anyways because this thing is probably, I want to be able to take advantage of the move bullish if Powell brings it in, but at the same time, I'll have puts to drop. And the way you win on this game is I'm going to lose, let's say $200 on my calls. And so as long as my puts make more than 200 on the drop, I win. If it bounces, as long as I'm going to lose $200 on my puts because you can only lose whatever you spend. As long as my calls make more than $200, I win. You can play that game. Honestly, the best way to do it and how I'm going to do it today, I'm just not going to touch it for now. I'm going to let it go and I'm going to let it see how it plays out and go from there. But I don't think I'm going to have an actual play. I've done that strategy on previous Fed rate decisions, and it tends to work out pretty good. But it's a lot of work. It's a lot of it. And if you're day trading there you have it. But use options because options have a very special thing about them. They have a max loss. So if I spend $200 on calls and this thing drops 10%, I can only lose $200. I don't have to have a stop in place. I don't have to do anything. I can let the thing do its thing. And if you understand that little secret on options, you no longer have to, get stopped out. How many of you get stopped out just to have it go to target? Well, if you buy the amount you want to lose on your options, you don't have to have a stop. Here's the difference when people get in trouble. Let's say you only want to lose $200 and you buy $2,000 of calls. That doesn't work. You're going to lose $2,000. Right? Buy the amount that you're okay to lose on. But on days that have crazy volatility, on days that I'm not really sure where things want to go, but I do know a big move's coming because of some type of catalyst like the Fed rate, this is a great play. It's not going to work on normal days, but on days like this where things go a little bit crazy, I believe this is a pretty solid play to go about. So
Love it, dude. That is some beautiful, beautiful wisdom. Someone just put in the chat pane that the SpaceX IPO is probably going to call the top of the market. I agree. It's going to get decently up there. Some very, very pricey valuations. I think it's 1.5 trillion, something around there, which is insane town. So yeah, if that truly does happen and those numbers come through, and I do actually think that I'll leave a mark very close to the top of the market. And then when I say top of the market, short term, probably 3 to 6 months at the worst case scenario. So yeah, man, it's going to be very fascinating to see how that plays out. But for right now, everything you just said was absolutely spot on.
Nice. Yeah, 100%. You guys are awesome, by the way. And I'm sorry we didn't get to more of your ticker requests. We'll hit more of them tomorrow. Come here tomorrow. Get ready to come party with us again. It is a different perspective. It's a little bit different than what they do. But I hope you guys enjoyed it. Let us know. Comment, what do you guys want to see more of? And we'll just keep talking what we do. Like we're big on charts. We're big on certain tickers and finding those opportunities, kind of releasing all the emotions. Everyone's got emotions around tickers, around money. We just want to see the opportunities. One last little thing that I want to leave you with is If you are trying to make money, if money is your goal in trading, odds are you will fail. Money is a byproduct of great trades. If your goal is money, you are going to find a trade. You are going to look for a trade. You're going to feel bad when you don't take a trade because you're going to see opportunities to make money. That is where you are really going to fall apart in trading and start blowing up trading accounts and then get frustrated at yourself and overtrade and do all these things, and your emotions are just going to whipsaw you all over the place. Let go of the money and have a goal of great trades. Great trades don't come around every 10 seconds. Okay? Great trades are great because they're rare. They're going to happen once or twice a day on day trades. They're going to happen once a week on some swing trades. And larger term, they're going to happen once a quarter on some larger term. The market's going to give you an opportunity to really pick a spot that's just will change your life. Trade great trades, which once that is your goal, the money will come because money is a byproduct of great trades. But it's also going to help you control your emotions. It's going to help you to finally stop chasing everything out there and feeling all this FOMO like you're missing it, because there's money to be made everywhere and your mind just sees all this opportunity. And that's what's going to sink you. So, last little parting piece of advice, change your goals in trading. The money will come when you stop trying to make money. Start trying to find great trades. Start trying to be a great trader. Release all these other things. That's going to open the door for you to finally get what you want.
My man. That's it. Stephen King's in the building.
What's up, gentlemen? Sorry, it was a late morning for me getting my daughter off to school and all that. Hence the real life trading part of the name.
That's right. Hey, that's it. That's it. That's all I do is drop off kids now and pick them up. That's all I do all day.
I'm going to get a little Uber sign to put in my window.
1000%. Yep. Absolutely.
Might as well. Our time's pretty much up, my friends, but all three of us are going to be here to party tomorrow. Come join us over in the Traders Network here with Pre-Market Prep. We have Dan taking over here in just a little bit. He's our master day trader, a stud. He's going to hang out with you for quite a few hours. And then I'm jumping back on later on this afternoon. So if you haven't be live in real life trading, you'll be live over in the Trading Network there. Jump in that. I'm going to be teaching you a strategy that I use to bring in consistent weekly income. It's been like my paycheck in trading, and it no longer have to be correct on any of the movement. It changes your life. We're going to be hitting on that every single day. We have a full day of education to kind of help you grow as a trader, make more money, and start changing your life, because that's what we're all about. So come check us out over at Real Life Trading. Jump into Traders Network here with Pre-Market Prep, and let's go hang out for the rest of the day. My friends, thanks for hanging out with us right here. This was awesome. We'll see you back same place, same time tomorrow. Love you guys.